Hello traders, Gary Wagner here, just before 10:15 in Honolulu, 4:15 in New York. It is Wednesday, August 24th, 2016, and this is the Daily Report for Gold and Silver. Tremendous downside pressure in the precious metals markets. Pretty much everything except for the US dollar down today, but gold and silver getting hit strongly in the markets. We were stopped out of our gold trade. Of course, we'll cover that in detail on today's show. But in terms of net change for the day, when we look at December COMEX, 1327.50, putting it off about $18 on the day, or 1 1/3%. The low on the day right here, right around 1327, and the high 1344. When we look at spot gold off about $12 at 1324.20. It opened at 37, hit a high of 1340, low 1323. So just like the COMEX contract, we're trading near the lows, last 1324.21, and as you can see, that's about $1 off of the low. Lastly, silver off about 1.25%, down 23 cents on the day at 1854. Let's take a look at our first chart and the trade that we just unfortunately got stopped out of. So traders, quite obviously, with today's downside move, strong downside move, we were absolutely stopped out of the market. We got in our trade roughly at 1354. We put our stop initially just below these lows right here that really sat around 1335. I did send out a notice back a few days ago recommending that this stop be loose. So my feeling or sense is that most of my subscribers moved it to roughly 1331, 1330 in that area, and absolutely we were stopped out. Traders, one trade doesn't make a track record or a trade performance. Obviously, I take each and every trade personally, although I shouldn't, because it's a very, very empirical thing. Technical trading involves a series of winners, a series of losers. The idea is that you have to have more winners than losers, which we absolutely do. And the winners, in terms of percentage gains, needs to outperform the losers, which we do. But each and every trade that I do report as a stop loss or a drawdown, it is not something that pleases me in any way, shape, or form. But more importantly, I cannot let it affect my overall trading and sense of where the market is going. Obviously, though, we need to take a look at our current models, take a look at the activity that we see in the market, make sense of it, and from there form some sort of a game plan. Now, my belief right now is quite obviously the consensus is that there will be an interest rate hike sooner than later in terms of expectations, traders, whether that's September, which I really don't see happening, or December, which I believe is still far enough away that it shouldn't have affected the market this adversely. Regardless of what I feel, it did, and the market came down and came down hard. On a technical basis, we can absolutely see that we approached the apex of our compression triangle. We talked about this all week. We believed that there was going to be a solid break, a release of energy. We absolutely got that, but we were 100% incorrect in the way that the market broke. I expected it to move back up and break above this particular price point for a number of factors. And one of the things that we were looking at in terms of our current Elliott wave count was that we had our wave 3, we have a wave 4, and this wave 5 really has to move above the top of wave 3 to be a normal wave 5. And we also, as the market did come down, I looked at that as long as this particular area held, my sense was that if we find support and it moves back up, we're okay also. That wasn't to be the case, and that obviously is not how this unfolded. We did get a break. The break was to the downside. And so what that tells me, and we talked about this a little bit yesterday, I really didn't want to believe that that's what would actually unfold. But I did speak about it if you go back and review the tape, or I'm sure you recall. And that's the fact that we had these series 1, 2, 3, 4, 5. We had a clear-cut 4. We had a clear 5, but this fifth wave stalled. Now, my hope was that as it came down and found support and moved back up. But I did mention yesterday that if, in fact, we get a break to the downside, then in essence what we're looking at here is probably, and we're going to have to take a serious look at our models over the next couple of days, but most probably what is simply called a truncated fifth. It's a fancy word for a fifth that didn't complete. And not that it's a common occurrence, but it is something that is in the book, so to speak, and it's absolutely what I believe on a cursory look we're experiencing here. We'll obviously need to go back and take a look at our models. Most importantly, what we want to determine is whether or not any kind of long-term damage from this most recent move has actually come into the charts. Again, on a cursory look, I don't believe so. I believe that we're probably now in some sort of a fourth wave down, that this was a completion of a truncated fifth, and this is our fourth wave down. And that's what I'll look to plot over the next couple of days. But nonetheless, we were stopped out. We did take a loss. We're up well over 275% on the year. But traders, honestly, that doesn't make me feel any better on today's trading activity. But nonetheless, it is what it is. And the key also is going to be where silver and gold will find support. Now, silver also taking it, but really not coming down nearly as hard as gold did. When you look at, actually it came down harder when we look at spot gold and spot silver. But when we spoke yesterday and took a look at this silver chart, this of course being our daily chart here, I talked about the fact that the next real level of support didn't come in till about 1854. It is a 61% retracement. It's a 61% retracement from just below 14 to just above 2150. We'll see if this holds here. We'll see what happens with gold through the night going into tomorrow. Of course, Yellen doesn't come out and speak until Friday, but we are getting that volatility in the market. Unfortunately, today's volatility was a swing that knocked us out and knocked us out at a loss. This has been Gary Wagner, wishing you, as always, good trading. I apologize for not being able to deliver that to you today. We'll talk to you tomorrow for another daily update and review. Bye-bye.